This one is just for AMC. I have just been absolutely perplexed by how long the stock can grind sideways. There have been several times where I thought that the downtrend we saw at the beginning of the year would continue further, and then we had these just weird big fat green candles. It's happened a couple of different times. I'm just on a chart right now. This is what I call the red triangle chart. Let me just explain this really quick. Like here, we had a big funny bounce, and now we've had another big funny bounce. And what I'm looking for would involve a test of an upper or overhead resistance, and then that rejection turning into a steeper decline leading to new major lows. So that's what I'm looking for. Here we are once again, we're at this very important level of overhead resistance, which happens to be the price target of the Reddit triangle. What? Okay, so the Reddit triangle. This was really frustrating because every step along the way of the consolidation period that followed the run in 2021 was just changing all the time. It's like, oh, new minor low, new minor high, and like the triangle just kept growing and growing and growing and growing. Eventually that pattern did shape out, and I don't like how I use these circles to show those touch points because these aren't as precise as the arrows. I used to use the circles, but you know, we had all the touch points we needed for this really nice symmetrical triangle, and it was huge too. As you can see, it was months long. I mean, it did take 6 months basically for that consolidation to end, so that was quite the experience waiting through that. I can't believe I'm still here watching this. Oh my god, in my Discord we were talking about how we watched our accounts explode when the price ran up to $72 and how we mishandled that. And it's inspiring, I gotta tell you, like, and also really comforting to know I wasn't the only person who held on and left a lot of money on the table back then. Like my account, when the price was up here in the 70s, my account was worth like $72,000, which was a lot for me, you know. And I did not. I held all through here, you guys. I didn't start letting go of my shares until we saw this downward breakout, and that was a good call because yeah, what ensued was pretty bad. It does look like a double bottom though, doesn't it? And we'll talk about that too, but okay, what was I even talking about? Just that we've seen this symmetrical triangle play out. The price target's been met, and now it's signaling an important level of support and resistance, and it's pretty cool. If you look at it carefully, maybe I'll do it with well, I already have these boxes on here, but there are a couple of touch points that are pretty well established. Look at these tails reaching all the way down. Like the first time the price reached that level, it rejected hard. It rejected hard, real hard. Let's just make this a little more clear. You can look at this big long tail. Holy cow! The next time there was a touch point there as well, but I'm not sure if the bounce was as strong, right? And you can see it wasn't. It really wasn't. We kind of had this sideways grind through here before the price broke through, and we're looking for a new lower low. We found that somewhere down here in the $15 to $14 range. And then the resulting high after that double bottom was, it just couldn't quite get above that level. You know, there it is again. And this time it rejected. So we had big support, less support, breakout, and now we've had a test of that price level. And the price then moved down to a new low until this last couple of weeks where we've seen this incredible rise, and notably this last week. We're on the daily chart now, and you can see 1, 2, 3, 4, 5 that, you know, AMC had a really good week. This is incredible. And on some of my other drawing sets, some trend lines have been broken, right? Like the primary downtrend is it's a clean break. But now what we see is that the most true trend line, okay, because this technically, let's talk about this really quick. So I have two trend lines drawn here, and this big one, this big fat one, this was when I said that we need to see a breakout of to be bullish, and here we are, we moved up, and now the price is touching this trend line, and I've forgotten all about this. The difference between these two trend lines happens really, really early, and one uses the absolute high, well, not the absolute high, but the true last minor high that preceded the downtrends, right? And that was at $44.43. And the other downtrend uses the most convenient place where the downward move started, which was right here at this candle. So the difference is 1 week, one trend line here, this thinner trend line that's always higher, it starts 1 week before this trend line does. And that's the only difference between those two. So while this was an important trend, this is the ultimate downtrend from that breakout. Now, if I zoom out too, this is going to be awesome. You know what? I'm just going to delete these. I'm going to delete this one. Okay, just remember that one. That was pretty significant. But what I want to do is just, let's say from the highest high, right? And that lowest low, which was right here. And then if I make this new trend line and don't overwrite the price at all, there you go. This is the downtrend. And it is possible that the price could rise much further before it finds resistance again, if it can break out to the upside. Now, this is very exciting, talking about the price running back up to $28, going into the 30s. I mean, wouldn't that just be marvelous? And AMC could, you know it could. And you want to hope for that, and I totally get that. I'm right there too, like, wow, that'd be exciting. But it's an unconfirmed move still, despite all these gains and this picture perfect Eve and Adam double bottom. Despite this is not yet confirmed, and there's one reason for that, and it's that the price hasn't closed above the minor high between the two legs of the W, right? So I would draw this W like that. And the price to go above would be right there, right where that arrow is, okay? And the price hasn't closed above that level. It almost did. It almost did on the 23rd. We had a close of 2074, but the high over here is 2096. And so the close was below that high. And so we're looking for this really important level of horizontal support and resistance, and look, we had it right back here. This really good bounce. I remember being bearish here and people were like, oh, Cap, you dumbass. I was like, I don't know, you guys, that doesn't necessarily mean it's turning around yet. And it didn't. Now the low from this candle, this 2080 level, has been really important. Look at that. There's a line that follows my cursor, and you can see this is the big price where we saw the real fall through. You know, that was an important measure of horizontal support and resistance. There's even a congestion zone here. Picture perfect breakout to the downside, and 1, 2, and 3, a nice little micro measure move down in there as the price found that low, and then we saw a double bottom, and this is a shelf of a bigger double bottom. All right, so yeah, there's some double bottom fractal-y thing in here. That's cool. Always fun to see that. And the price came up to that same level, touched into it, and turned down. Only a wick here. And again, this happened one more time on the 16th of February. The price fell, and then we saw some more downside and found the lowest low from the downtrend. Boom. Whew, that was a ride, right? So now the price makes this sweet little pivot and begins this run. And now we see that resistance that's occurring way back here. This was a big zone. That was a big volume day. 107 million. That's the first time that we had seen 100 million volume in a day in a very long time. A very long time. You'd have to go way back into August of 2021 to see a relative level of volume that high. So people got really excited, and then we had an even bigger volume day here. Incredible. This is an amazing support zone or resistance, right, on the way up. And it makes sense too, because look at these corrective phases here. I'm gonna dive into exactly what's happening in this downtrend, and it's gonna blow your minds, because you can clearly see these levels, and the way that the patterns move through them is really pretty awesome. I mean, it sucks the price is dropping, but it's exciting to see that the analysis is congruent and fluid. I think that people are looking a little too hard. Maybe I'm looking too hard, but it's just simple things. It doesn't have to be too complicated. Just double bottoms and little 1, 2, 3 runs. That's really all I see here. Anyway, so yeah, this is pretty cool to see that. Well, once again, we have this area of resistance, and we have these big wicks. And this was a high volume day. Look at this, 170 million. Wow! Now that is a lot of volume. Okay, that is way more. You got to go way back. You got to go way back. I don't know how far back. Here we go. Yeah, same point in time, August. Okay, like that is a ton of volume, and then it fell off the face of the planet, right? And volume's up, but still down. And look at that wick. Look at that wick going into that zone. This is going to be an incredible level of resistance right here. I mean, you're not going to see the price run up into the high 20s and 30s until this resistance zone gets taken out, and it's a doozy. It's a doozy. And actually, to see the price not continue to move higher here and even flip on its head between these 2 days, could be an indication that the run is over. The RSI has fallen flat, and we didn't see this rise go until it hit the overbought level. If the RSI continues to decline from here, this would be like this bearish rise, you know. And I want to use that RSI to kind of move into these next series of charts, because I've shared this one before in the past, but the next ones are I'm really excited about. I'm so happy with these charts. Okay, so let's talk about the first measured move down. And to view this chart, I need to get just 100, or oh god, I need to go intraday. I need 180 days at 1 hour. Okay. And when I zoom out, I can show phase 1, 2, and 3 of this measured move down. So for context, this is a 15-minute chart, or 1 hour chart. So you can really see how the end of that Reddit triangle played out, right? And these 3 peaks right here, one peak, 2 peaks, and 3 peaks. These are 3 really important peaks when we draw the trend lines, because, you know, depending on where you want to draw that level of resistance matters over time. So here we go. The first measured move down. It's pretty simple. It's just a push lower, and then you have this corrective phase, right? And this was between November of 2021, and we didn't find that low until we were in December. Okay, so this is like a month, 2 months probably of time. From December to November, yeah, a month and a half, 2 months. And what's really cool here is it makes this perfect move. And I guess in my other videos I've already explained this a lot, but Bukowski has this measured move down pattern in his books, and essentially it just describes a decline in the price. And if the price can move pretty smoothly between certain Fibonacci retracement levels and form these predictable trend lines, then there's a likelihood of further decline, and it's pretty spot on, and I've been watching it play out. So here you have phase 1, and we started up here at around $44, and phase 1 was just the decline, and the price started to fall. So at this decline, I decided to draw my Fibonacci, and we're looking for a 70% retracement, and I'm measuring this as a downtrend. So I'm starting at the top and I'm going down, so 100% on the bottom. So we do see the price fall, and on the 1 hour chart we have 2 consecutive lower lows. And what caught my eye here is that there's actually there's bullish divergence in the RSI here. As the RSI makes a higher low in the RSI and leaves and exits that region, what we have is bullish divergence. So the price here found some upward momentum and climbed higher. And I've actually made this trend line here as an internal trend line, this green trend line. And I did that to show that the price bottomed outside of the trend, and this has been my experience, is that levels of support and resistance are often passed through, and then it's below those patterns that's what forms the bottoming patterns. So like the double bottom wouldn't per se be standing on top of a level of resistance, but like probably just barely hanging onto, and the price would come back up and then consolidate or vibrate a little bit at that level. So I applied that same logic to my trend lines, and you know, it came out great. There's going to be a breakout and a pullback in this corrective phase after bullish divergence in the next 3 measured move downs that I'm going to show you, starting with this one. Okay, there are these incredibly similar patterns that have played out. I can't even tell you how well. I'm going to show you how well 2 or 3 different times now. So it's gonna be nuts. So bear with me here. So you have this bullish divergence in the RSI, and you have this false breakout of the corrective uptrend, and then you have there's another smaller uptrend that shows the bounce there. Okay, and then the price reaches up to 61.8% or thereabouts. Okay, you know, it's plus or minus. The price is going to interact with that level, and it did, and then it fell and fell and fell, and then when the price moves below that corrective uptrend right here, I'm saying that is the beginning of phase 3, and phase 3 is in red. Jeez, there's a reason why I was so zoomed out, because I can't freaking see anything. Yeah, phase 3, where the price makes its new low. Boom! And I used the low here after phase 1 and from that bullish divergence for the Fibonacci retracement. So you can see that level was important once again when the price broke out, pulled back up to, and it starts interacting with it. Okay? And so that is phase 1, 2, and 3. Initial decline, corrective phase, new lower low. Okay, so you can see that the RSI made bullish divergence. It came up, but didn't come up to quite to the overbought level, right? And there's a decline in the volume. And the applied volatility, I haven't seen any correlation between. But remember that, okay? Because this is going to look exactly the same on a different time frame, and it's a fractal, and it's so cool. So this next one is I show on the 4-hour time frame, and it's the second measured move down, and here we go. So remember, the last one was like about a month and a half, the end of the last year, right? So this one starts in mid-November, and it ends sometime out in January, or maybe even early February. Yeah, so okay. Phase 1, initial decline, right? And then we had some bullish divergence in the RSI again, right? Oh wow, you're kidding. Yeah, same deal, right? It's much bigger. It's on the 4-hour time frame. It's a big W, basically, right? With the right side higher than the left, and that's very important because in the divergence, the RSI lows have to be coming up and exiting this oversold or near to it region, and the price needs to be making a lower low in divergence with that, all right? Making lower lows. Higher lows in the RSI, lower lows in the price, bullish divergence. And once again, we have a trend line here in phase 2 with some weird V-type bottom thing that goes below that level. That happens right after that divergence. And the when the uptrend from that bounce is broken, the price comes down, tests the overall corrective trend line there, the big green one, the big green dashed one, and then boom, once it passes through that level, it enters phase 3 of the measured move down, and we see the price fall and fall and fall until it reaches a new major low. And you can see how the RSI after this double bottom did not move into the overbought region either. The volume throughout this cycle was pretty random. We did have a big spike of volume here before a large or very long level of just choppy, grinding, sideways action. So yeah, and here implied volatility was falling. This is a beautiful measured move down, and you can see I use the same relative points for the Fibonacci retracements, going from the top of the run down to that new low that was set, and again the price stalled out near 61.8% before boom falling down, and really didn't quite really get any higher than it when it did break down. You can see it did several times push above, all right, or even touch it on the 50, right? That happened a couple of times. You can see that here and here. A lot of strength there, right? Like, okay, the bulls are still here. They're fighting up to this 50% line. And then they fell a little less high here, and then this time they did not get over that 61.8 in a meaningful way. And that was a sign of weakness again, and boom, we saw the same thing happen. Okay, so that's the second one. And the first one is in here. Okay, the first measured move down is 1, 2, and 3. So measured move down 1 ends at the first new low of measured move down number 2. And the corrective phase shares the same bullish divergence in the RSI, the same V-type bottom out of the corrective trend line, and also then a breakdown of the price after failing to rise above 61.8% and losing the corrective uptrend from the V-type bottom. And then the RSI also failed to reach overbought. So, very, 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 very similar. And they're inside of each other. The first one's nested into the big second one. Oh my god, that's crazy. And what's really interesting here is that there's actually another one. And it's like, oh my goodness. And I'm like, yeah, this isn't over yet. I've been saying this a lot for a long time. There's measured move down inside of a measured move down inside of a measured move down. And we're about to see the third measured move down. So here we go. Wow, this is the biggest one. I'm on the daily time frame now, okay? And this is, you're gonna hate this. Okay, so this measured move down starts somewhere up here, right? It looks like I chose to use the breakout confirmation of the last pattern, which was at like 39.30. All right, so the price was consolidating here, and then once we lost this horizontal level of support and resistance, this level through here, that's when the price fell. And so I used that as the start. I wanted to get as near as I could to the price of consolidation at the end of that massive Reddit triangle, and that's what I got. And so you can see right away the first measured move down right there, and that's part of the second measured move down. Okay, and what I'm saying is that boom, when the price fell and stopped falling, it made another corrective uptrend. It had a breakout and a pullback, forming a V-type bottom with a secondary trend line that moved up. And all of this happened on an occurrence of bullish divergence in the RSI, which is present, right? Okay, so remember, in the RSI, it's all about the closes. So you can see the peak down here, the absolute low in the RSI at 17. That happened on this tail, right? Which was at a low of 1340. Okay, and then down here we have the bounce near that oversold region and then moving up higher. And that happened at a lower price at 1290. Okay, so lower low in the price. And actually it's closed price, right? So I drew this wrong because there, it's actually steeper, right? Okay, and then you take the lower lows or the higher lows in the RSI, they're going up of course, so there it is. Bullish divergence in the RSI, followed by a rise in the RSI that falls short of overbought again. And this one also shares a downtrend until we have this funny spike from last week. And here we have the price once again moving up to the 70%, nearly to 61.8%, nearly to 61.8%, and then falling down. All right, you can see it's very close. Yeah. So that's the measured move down, you know, and phase 3 just hasn't played yet. It's following the exact same pattern. So this is the bearish thesis. We either are watching the most massive double bottom form up ever, well not really ever, but another massive double bottom form, or we're seeing a measured move down. And I think that we've seen 3 consecutive days of not closing above the last intermediate high as a failed confirmation for the double bottom. And what that does is it puts these really bearish wicks up here on these candles, which would indicate a further decline, okay, which would follow the fractals from earlier too, the same patterns. So yeah, the measured move down. Now the question is, what's the price target going to be? If I go to the first measured move down, that range I took for that initial run for phase 1. Now this is really important. I use the same relative lows and to make the phases, okay, from each of these. So the Fibonacci level in phase 1 is going to reflect the same Fibonacci levels in 2 and 3, and relative to their positions on the charts. So that's what a fractal means. It has to meet this very extremely specific criteria. There are at least like 4 or 5 different qualifiers for each of these. All right, they have to have an initial downtrend, they have to have that corrective trend, they have to have the bullish divergence, and they have to come and test 61.8% on the Fibonacci, and then follow the downward breakouts. and also fail to, you know, rise in the RSI. And they do consistently, those 4 or 5 things. I didn't even count how many they were, but here's what I'm saying. Ah, jeez, I'm losing my train of thought. What I'm saying is that range is important and specific and makes sense. So when I take it from phase 1, you can trust that when I apply it to phase 2 and 3, that the level makes sense. So here we have the 161.8% retracement level, or extension, from that range, and that was $13.61. And I mean, you see it, right? You see it. Boom, right there. And that's a terrible color. Right there, okay? That would be that bottom for the double bottom. Would be that Fibonacci extension. That's insane. If you knew that we would be watching measured move down fractals, and if you knew that with certainty and understood how these fractals actually work, which is very simply just 1, 2, and 3 stacked on top of each other, you could have projected this with Fibonacci levels. Yeah, you could have built this. Like, this is really cool. So yeah, 161.8% extension was those 2 big lows, and that could be the bottom. That could be the bottom, but that has not been confirmed yet. And it's really looking like more likely going to be this. There's going to be another downtrend. Remember, shorts aren't going to close until ultimate lows are met. So what's the ultimate low? I mean, it's going to be higher than 0, but what is it? Well, these guys are going to probably use technical analysis to figure that out. And the technical analysis, I think, that makes the most sense is going to give us a price target here. So here we are, the phase. This is the second measured move down. It looks exactly the same, right? Basically. And we have that same range, okay, that low set on phase 2. And let's look for, and then the 161.8% extension is at $6.20. That's very congruent with my $7 price target. I got that from the symmetrical triangle on the weekly chart. So, riddle me this. Is the price really about to moon, or are we going to see another completed measured move down? It looks like to me the price is going to head lower. We don't have a confirmation yet, okay? This is it. Either the price gets above $20 or it doesn't. That sounds like useless info, but it's actually a big deal. If the price can come and make meaningful closes on good volume above that level, and that would be incredible. So here's something else that's really cool. So now that I've run you through these measured move downs, I'm going to go back and talk about the 3 peaks at the end of the Reddit triangle, because they form trend lines that show where the measured move downs reject. Okay, and this is like the no way. That's like, yeah, this is gonna be mind blowing, I think. What do I want to do? I want to go. Let's go into the. I need 1 hour for like 180 days. Okay, and then I gotta turn on the first measured move down and zoom out. Okay, so here it is, right? So there were 3 peaks, right? There was 1 peak, 2 peaks, and 3 peaks. And after those 3 peaks, we saw that we saw the end of the consolidation and the price fall, right? So check this out. If I make a trend line on those two peaks right there, right? Boom. This, like 1, 2, 3, 4, 5 days later, that little minor high, that's actually going to make that trend line, right? And would you look at that? Okay. Do you see it? Let me make this a different color. I'm going to make it red. I'm going to make it a little thicker. Look, if I use those two candles exactly, boom, that would be the last minor high from that corrective phase before the breakdown. Whew, cool, right? Big deal, right? Okay. Why does it matter? Because phase 2 breaks down at if you start the trend line from the next minor high, and then the third one, right? We'll draw a trend line from this peak, and you'll see it too. So let's go ahead and turn on the 4-hour chart now. And oh, look at the second measured move down. Okay, looks good. Okay, so let's find those three peaks again, because you gotta know them. 1, 2, and 3 right there. Okay, now we're gonna be using that second peak. Okay, if I take that second peak and I draw it down, you know, there it is. Let me make a different color. Let's go red. Oh my god, you're kidding. Those two peaks now. Not the last, second to last and last. Boom. Right there. You can see that rejection that occurred. And that was at the end of phase 2 before the price started to fall more. And guess what? That's true on the big one too. Let me think. I gotta get out of this chart scale. Oh my god, and I need to auto zoom. Alright, so let's go back and find those peaks. 1, 2, and 3, right? And let's do the trend line test. So we're gonna go here, and then we're not gonna overwrite those. Boom, and actually all 3 there hit, right? And yeah, that's close. Maybe we get another $1 or 2 before we see the price move down. But remember, this is a big trend line, okay? There's gonna be a big give, a big plus or minus. Like, you know, you just say, hey, chop off the wicks, right? Like, if you want to make this say we've already hit that, you can. Just connect them. Just connect that level and this level and see if that looks good. And, you know, there's going to be a plus or minus to this. But when I found this, my bias was confirmed, because the daily touches down here actually was how I connected those two lines. Is I said, hey, what does that trend line look like? I just went back, right? And when I did that, it was like, oh man, that's like not too bad, not too shabby, right? We could like zoom in on it. And yeah, that's how I found it. I remember I was looking to define the pennant we've seen forming up for the last couple of days, right? And so I was like, what is this trend line? I was asking, what is this trend line, right? Is this an upward breakout of something, or what? And that's what made me look back. And when I looked back, that's what I saw. And then I decided that this was that consolidation on that trend line. That's what this is. Here we are. These last big runs have been the decision-making process for breaking out through that trend line. And we had these you know, big high volume events back here that were really exciting, and the RSI was very, very overbought. And this was this was crazy stuff, right? So you know, the RSI could still be oscillating bullishly. It hasn't fallen to 40 in a while. It was at 40, you know, I say a while, I'm looking at a 15-minute chart, right? So like I'm looking at 2 days. So over the last 2 days, it's been oscillating pretty bullishly. We're gonna zoom out to 4 hours, see what the 4 hour looks like. Interesting, right? Just came out of the overbought level, heading down now. Volume seems to be petering off here. Implied volatility is dropping, which means the price is consolidating here, yeah. And that downward trend is somewhere in here, and it's probably deciding right now, are we gonna pop to the upside, touch it, or are we just gonna give up and see the third leg, the third phase of that measure move down we've seen so many times, right? I mean, this would have been the breakout, but it wasn't. That's kind of what last week says to me, is this could have been the breakout, but it wasn't. On the weekly chart, you know, it looks pretty good, but you got this wick, and you don't see the price closing above that last minor high. You know, it is a good close. Like, the close is above the last weeks, like for a few months. That's true, and that is a lot of volume. But you know, if we're talking about on a weekly time frame, RSI could go a lot lower. Like, you'll see how it looks like it might be finding some sort of double bottom in the RSI. This is a swing failure bottom, right? You see that in the RSI a lot. RSI comes down, and then we see this bounce, and then we see a higher high in the RSI. Even if we don't see this nearly oversold region like we do in bullish divergence, like, it's still a good swing failure pattern. The bears are coming down and got stopped. That's essentially what it says. RSI is at 44, so it's not necessarily in a very bullish place, right? And I mean, it looks like it could go higher, right? Next week is the big week. I don't think anyone should be saying it's MOAS because we need to close. We need to close above $20, above $23 before we can even start thinking about going back to $30. You know, like, what? It's crazy. Like, why let the cart get that far ahead of the horse? What's the point of doing that? The truth is that if you go way back here to that ultimate high and make a true trend line, okay, don't overwrite the price. It's like, okay, well, guess what? You're drawing that trend line on those 3 points where we were just showing the other the three down trends, showing where the rejections of the last 3 measured move downs are, last 2 are, and where the third might be. Like, this is crazy. This is adding up so much, so fast, so quickly. Like, and it's per a specific analysis type. You know, Bulkowski. Like, this is all his technique. Like, I'm not making any of this up. I'm not looking to come up with my own explanation and invent some reason, look, I'm so smart. The idea is to see if this shit works, and it fucking does. It's fucking cool. It's so nerdy. Oh my god. But I guess it is hard because not everyone has the same idea. Like, I don't see many of my own ideas on YouTube ever, you know? Like it's even hard to watch Trey these days. So yeah, we'll see what happens next week. Is the RSI gonna start oscillating bearishly on the weekly time frame, which would mean now, hey, we've come down this low, now we need a failure to rise, which could happen. If we see a failure to rise, you know, on the weekly time frame, the RSI could get very, very negative. Okay, and that would be in line with the measure move down to $5. So yeah, but that's unconfirmed. It's just as unconfirmed as a bullish run. So it really comes down to what happens next, and I'm gonna be watching very closely next week because it's gonna be a big move either way. I just I'm still bearish. Because we're still in a downtrend. The price is still in a downtrend, you know what I'm saying? Like, well, like, okay, we gotta see $31 next week to be out of this downtrend. $31. Let that sink in. That is a long way to go, right? At 20, going to 31? Like, geez, we haven't been up there in a long time. I think we're likely, we could even see pipe tops, right? And this is what I'm betting on, actually, is I'm betting on pipe tops. I bet you this thing turns around and just dumps. I don't see anything to tell me otherwise. Inflation's bad, and the economy's great, and everyone knows the Fed has to do something sometime soon, right? Interest rates went up a little bit, the market's been rallying a little bit, right? But I'm going to show this too. I don't know if that's real either. I can't even believe it, right? Like, here I am talking about the SPY. Is this my ascending broadening wedge? Boom! My ascending broadening wedge. This has been a great pattern. You know, I've been watching it for a while now, and I was expecting this to fall down and fall to pieces, but it didn't. It's bouncing back up, right? And I thought it might be in a measured move down kind of a deal, right? And now that I'm looking at it, it might be. Let's take the percentages here and let's go from the peak here down to the first bottom, like right there. Oh my god, I need a blank chart right now. Give me blank. Yes, this could be a broadening top with a bearish partial rise. Okay, don't forget that. I'm glad I got that on my video. We're gonna clear this drawing set, and we're gonna do some charting here. Remember, we went from the high to that first low, right? So boom, that would be 2. Oh, whoops. I have to draw it upside down to get 100 down here, right? Yeah. Okay. So that was a big move. That was a huge move. Wow. So it doesn't quite follow the same. It went all the way up to 38.2. That was a hell of a bounce. And then it came down. And there was that V, that could be the V-type bottom I'm looking for, right? And it could be in there. Huh. Interesting. So that's a huge retracement to make twice fail, and now we see that the price of the SPY is coming back up, and it did get above that 50% retracement from that first move, unless that's not the first move. Maybe that's the first move. Boom, perfect. Doesn't that look better? That's like a perfect touch right there. And then we have these tweezer tops, little miniature double top. I remember that. These wicks. The price went down. So this is a level of resistance right here on the SPY. And where are we at on 54? Right there. I feel like, wow, the RSI on the SPY is usually so high. It's crazy. Let's try on the left extension. That's an important level for the SPY on the RSI here. That 53-ish. Like 50 on the nose, or 53 maybe even. So this could be, you can see that there was upward movement and then boop, and now the RSI is losing steam here on falling volume in an uptrend. Like this was a good bottom, but maybe it's already over, right? This could turn around and start to fall, and that would be quite the move, you know. That downtrend would, or that corrective uptrend would probably be right there. Interesting. Maybe, isn't that interesting? What an uptrend. Maybe when this uptrend breaks, that'd be an internal trend line, because I'm excluding this low. This looks like a real clean V-type bottom to me. Like I said, that typically happens outside. Yeah, look at that beautiful. There's like this beautiful bottom in here. You see it, right? Shoulder, head, and shoulder. And then boom, this big breakout, and then up we go. But yeah, so I think that the SPY might actually be ready to turn back down. And yeah, this is what it looks like on the charts. I don't know how it's all going to play out, but I gotta tell you, AMC is looking like it might go down further for me. Next week's gonna be the big day, the big week. Is it true or is it not true? Oh yeah, and then I said, hey, I bet you that the corrective phase of each of these measure move downs probably means something, and they're actually really important price levels, right? So like it basically breaks the ranges, the trading ranges up, and you can see what they are. So like 12 to 13, 21 to 24, and then from 24 up to like 34-ish. Like I can show you what I mean here. Like let's go to the first MMD. So what I did is I said, hey, the price range of the phase 2 corrective trend right here, this range, right? This would be that trading range, and that was that top layer, right? So you can see these up kicks in the price create those areas. Here to there, here to oh wow, how did I do this? Oh, interesting. They're gonna overlap a little bit. I should have paid better attention. Nonetheless, if you take this out to like, you know, way out, you can see back here, you can see how the price moves through these areas, finds support at those levels sometimes, right on the weekly chart. You can see that. Wow, this is 2016, and this was an important level then, right? Boom, 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 and it has been, always has been. So yeah, you can see the bottoming pattern occurring below that level of support and resistance, right? You can see that. And this would be an inverted head and shoulders through here. That didn't really play out all that well, but the price target probably was met way over here. Yeah, what a weak little thing before finally finding some support. But that's what I was saying. And what's cool is this price level, I calculated it from the movements that have been happening recently, and they go all the way back. So yeah, bottom pattern appearing with dips below the level being calculated in the present and holding true to the past. It's a pretty good level. Pretty good level. Okay? So here's the thing. If the next measure to move down is going to take out its entire range of consolidation too, right? You know, that would be that would mean that we'd be looking for support at the next major low or whatnot level of support, which is way down here, right? Towards $5. Yeah, remember that was the 161.8% extension of the second measure move down, or $6.20. Okay, and that is very, very close to our support, right? And this is a bottoming pattern, right? So maybe those bottoms actually occur below the level, and it is $6, and it is $6. So yeah, if next week is a red week, if next week is bad, it could get really, really, really bad for another long while. And if the price does go up, it's still going to be like tooth and nail. And let's just face it, that probably means we're heading sideways. But this is about when I thought we would see a move like this. Let me open up the this guy. This is the big one, the big double bottom, and then this is where I got that $7 price target from. And I made it 11, and I just wasn't sure. Maybe I should take another look at that. I don't know. But regardless, the reversal did happen at the apex of that triangle, of course. So we did see that trend reversal. I don't know or think, though, that that's going to hold for very long. It just really doesn't look great at this level, right? God, zoom in. Like when you zoom out, like we're still way below these really important critical levels. You can see the double bottom target. That's what I wanted to show. You can see I have in purple this double bottom back here, and the confirmation price when the move happened above, it exploded, right? Bukowski talks about waffling handles, which was that January to June, poof, and then we had the breakout, okay? And the price target for this, that big double bottom would have been $23.45. So that's an important level. You can see when we started this downtrend, that was where the price passed through and then boom, got absolutely thrown back higher. This is a very strong level. This was a big move. This 1, 2, 3, that was huge. And then, well, when the price lost that level, it fell from 23, okay, down to 12.90. That's a huge decline. Big deal to lose that level. And so now we see the price attempting to come back up and fail to achieve that before turning around or consolidating, right? So we're gonna see what next week looks like. No one's really gonna know, and we could see the price move back up to 22.30, but 23.45, getting above 23.45 is gonna be the first step in a bullish reversal. And if that bullish reversal is confirmed at the end of next week, I'll calculate a bullish price target, and it's gonna start from the bottom level of this last triangle and go down to the lowest low, which is a big price range, okay? It's gonna be like 32 minus 13. So yeah, that's a lot. That's gonna, and we're gonna take like 69%, I believe, yeah, of that range, and we'll add it to this confirmation price, right, at $21. So yeah, the price would probably be breaking back out up into some really sweet levels if it happens. Next week we'll know for sure, I think. That's what I got.